Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So what I've done here is I've just more or less drawn a generic sort of a support level in here, but you can see that it really sort of correlates with a number of lows that we've seen sort of in place over the, or if you will, support tests that we've seen happen over the last couple of months. So the idea is with the EUI breaking below that support, there becomes a high probability that we should see some form of a corrective move over the next little while. Now, that's not a guarantee. Remember that we're always dealing with probabilities, but when we get that kind of a break of a support level, what we would look to do is, of course, go in and buy puts on the EUI in order to participate. So the idea is that we want to be patient. We want to make sure that we're just always keeping in mind the basics, no need to get fancy, and using these key support and resistance levels and trend lines in order to establish our directional views. So let's look a little more closely at what we mean by support and resistance. Really what we're looking at, of course, is the formation of those peaks and troughs, if you will, as being the support and resistance levels. And ultimately they reflect, of course, strength and weakness at certain price levels. And the idea is that the more tests or the more times a specific peak trades into a certain level, or the more times a certain trough trades into a certain level, the more valid that support or resistance level becomes. And again, it just simply reflects strength or weakness at certain price levels. And as I mentioned, the lows are considered support and the highs are considered resistance. Now, here again, we just have a sort of a generic trend, if you will, that we've drawn here. And the idea is that the market, of course, never moves in a straight line. And ultimately, at some stage within a trend, the market is going to turn around and it's going to pull back, whether it's because of a profit taking, or whether people are looking to cut their losses or what have you. Ultimately, there's going to be a change in direction. So when that market turns around, what's formed is a peak, or what we could refer to as a resistance level. And the idea is that as, in this case, the pair value pulls back and retests support, we have to be very cautious of this resistance level, because that resistance level, once again, forms an area where the market might turn around and reject. However, as it breaks through that level, okay, we would then look to the next resistance level as a target. So the idea is that as we begin to play into these push into these previous levels, we can use those levels as a means of establishing a target. Now, it's important to understand that as the market pulls back, each previous resistance forms reverses their role, if you will, and now becomes support. And so, as you can see here in this sort of very generic diagram, that with a pullback here and a secondary test, okay, we now have the makings of what may very well be a reversal pattern. Now we're going to look at some reversal patterns, or a reversal pattern, a little in a little bit here. But the idea is that when we are analyzing the market, we're very much just simply focused on the idea of looking for key support and resistance levels, and how the market is behaving as it approaches those levels. So whether it's an FX options pair value such as the EUI, or any of these other ones that we're going to look at here this evening, or whether or not it's a particular index-based option, it doesn't matter. The fact is the principles all remain the same. Now, what are the possible implications? Early warning of a trend reversal. Okay, so the idea is that if we happen to see the market again the pair value such as the EUI example trade into a particular level and test that on a number of occasions, that could be the sign right there that, hey, wait a second, the market is not prepared to push the U.S. dollar any further at this point. There's weakness at this level. Perhaps it's time for us to lock in some profits on our call options. The other indication is that if, in fact, that resistance level is violated, so if there is a break beyond that resistance level, then based on our, the technical basics that we've discussed, an uptrend is confirmed by a higher high. We may look at that break of that previous resistance level as a sign of a continuation and look to take advantage of a trade in that direction and try to establish a target based on previous resistance levels. Now, on the other side of the equation, of course, if support is violated, so if we get a break below a support level, we're looking at that as being a sign of a high probable continuation of a downtrend. And so the idea is that when these particular levels tend to be broken, usually momentum, not all the time, of course, but usually there's a certain amount of momentum that carries the price action through those levels, and we can establish targets at lower support levels, or in the case of a move to the upside, we would be establishing targets at previous resistance levels. Now, I just actually saw a question here with respect to the trading hours for these particular currency pairs, and they trade like your standard equity options in the sense that the market opens up at 9:30 and you can trade them till 4 o'clock. So you have to recognize that, of course, when you're dealing with the currency market, it really doesn't stop in the overnight session. So on some occasions, depending on the pair values that you're looking at, you're certainly going to see some gaps in the pricing, because of course there's been some market action in the overnight session that is then reflected in the value of the currency options, the FX options, once the regular trading hours get underway the next day. So you're able to place your trades just exactly the same way you would if you were trading standard equity options. Now, just to get back to the implications of the identification of your support and resistance levels, this is really what we utilize for our trade entries. So in other words, we can establish a directional bias based on any number of different methodologies, but at the end of it all, we're really looking for a break above or below a particular support or resistance level to trigger our entry into any specific opportunity. What we're also doing is, once we've established where our entry point is going to be, we've used a previous support level or a previous resistance level as a mechanism for establishing a price target. So the idea is that when you're able to identify these key levels of within a particular pair value, you can already have your trade mapped out before you in fact click any button. So the idea is that you're doing the analysis, a thorough analysis of the price chart. You're establishing your directional bias. You identify your entry level. You've established your targets, and when everything lines up, then you can in fact pull the trigger, purchase your option contracts that you feel are the most appropriate to utilize, and then manage through the trade based on the same observations that you've established prior to even entering the trade.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.